Once you get the retail into these sort of highly leveraged option strategies, the volatility obviously spikes up because what do? You buy out of the money, call and put a lotto tickets, right? And it forces dealers to gamma hedge these things, especially if they're very short dated. And so if we get like 0-day Bitcoin options trading where you can essentially have like, 100x plus gearing on your position, you're going to start to see some wacky moves in the price. We are entering this phase of inflation and populism. This bull market is just getting started. And I don't think people have the right imagination about how ridiculous it can get. So yes, $1 million is my price target.
This crypto bull market is just getting started, with 99% of people still not realizing just how ridiculously powerful it could get. In fact, it'll be so powerful that Bitcoin could reach up to $1 million per coin. That is the latest message out from Arthur Hayes. In his latest interview, Arthur Hayes discusses Bitcoin in the context of its rapid price increase and reveals exactly why Bitcoin is here to stay. Hayes suggests that Bitcoin is part of a larger economic and political trend. He mentions government debt and elections worldwide, indicating that governments may resort to printing money and providing benefits to gain support. This, he argues, contributes to a broader environment of inflation and populism. Make sure to stick around to the end of the video where Arthur reveals the only time he will be selling Bitcoin. Also guys, if you want to stay most up to date on the crypto world, I send out a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news, all for free. Click the first link in the description, enter your email, and join over 50,000 others to become a better crypto investor right now. Now here's Arthur Hayes with his latest Bitcoin insights.
I think people are not I do not think people have a big enough imaginations right now. Oh, I need to like take some chips off the table. Oh, it went so fast as 70,000. Like, no, motherfucker. Like, why did it go so fast as 70,000? Because a bunch of people now can like check a box and buy some Bitcoin ETF. Like, there's this whole government issue of like too much debt. There's elections around the world. And what's the message? I'm going to print money and give you stuff. Rotor, supporter, whatever. Please support me, right? That's happening. People understand it. It's visceral. We are entering this phase of inflation and populism. This bull market is just getting started. And I don't think people have the right imagination about how ridiculous it can get. So yes, $1 million is my price target. It's hit a nerve. The timing is right. Everybody's freaking out about these massive, well, not everybody, certain investors are freaking out about these massive deficits. There's this inflation issue ever since COVID. There's a general mistrust of the government after they lied to us about vaccines and all sorts of other things, right? And then you have contentious presidential elections around the world. People want something different. And I think this taps into sort of that narrative. And then you have, the entire TradFi financial press pushing this narrative of, yes, Bitcoin's a good inflation hedge. Guess what? Here, buy this product over here. Pay these guys some money to manage it for you, right? So now all the interests are aligned, and now you have CNBC every day spitting out messages that you and I and others have been talking about for decades, right? So it's just that incentives are aligned, and so it can continue as long as the narrative holds. Once you get the retail into these sort of highly leveraged option strategies, the volatility obviously spikes up because what do? You buy out of the money, call and put a lotto tickets, right? And it forces dealers to gamma hedge these things, especially if they're very short dated. And so if we get like 0-day Bitcoin options trading where you can essentially have like, 100x plus gearing on your position, you're going to start to see some wacky moves in the price. And so while, yes, a very passive, steady stream of money coming in that might be a bit sticky, might dampen volatility to some extent. But remember that once we have these derivatives on top, those ETF trading flows are going to fling up and down, and you're going to have very big traders having to hedge their positions in the spot markets and in the non sort of like TradFi type derivative markets offshore. So I think the volatility probably increases as we get more different types of people trading highly leveraged derivatives on the back of the Bitcoin ETF. You look at how the percentage of passive investors in the traditional stock market across the world, it's destroying price discovery. The stocks that are highly valued because they're highly valued, not because they're good companies, right? So if you're in the S&P 500 and you're a top market cap, then you get more money just because of how the index is weighted. And so that's going to happen in this passive situation, right? As people just tick the box and the money keeps flowing into Bitcoin and they keep accumulating more Bitcoin while this narrative holds, they don't do anything, right? So Bitcoin is one of those monetary assets where it has to do something for it to be valuable, because if it doesn't move, then the miners don't get paid. Passive investing like BlackRock do fuck all. Their point is, I'm going to create this vehicle, you can put your money in, I'm going to charge you some fees, and I don't do anything else, right? It's a great business, but they don't care one way or the other about Bitcoin. They're not going to do anything either good or bad to further or, put at detriment the movement of Bitcoin. And so that's the issue. It's just not going to move. So if it gets too big and there's not this movement, then we have this whole segment of the market that has no connection to what's actually going on. And that could be an issue if there's some contentious sort of things that need to get approved on the network level. Maybe there's some privacy things, security things, whatever it is. And these passive investors, because like, well, this is not my job. I just sit here and I accumulate assets, right? And so that's, I think, the risk. Are we anywhere close to that? No, but it's Bitcoin, right? The whole point is everyone should be able to buy it for whatever their purposes are, and hopefully we've created an economic game such that we still get people to use the asset. And if we don't, then the game is faulty, and we have to go back to the drawing board and do something else. Bitcoin is the sort of release valve, or the most popular one since 2009. And, it's gone up the most of any asset class ever in human history, which makes sense because the United States has printed the most money that it's ever printed in its entire history. If you move over to China, similar sort of situation, their entire industrial policy is centered around, let's make sure that we borrow money from the people through the banking system at a lower rate than which the Chinese economy grows. So Chinese economy on a nominal basis has been growing, 5 to 20% every year since the mid 90s. But on a bank balance, you're lucky to get more than 4 to 5% as a saver. And so what happened in China? Obviously, there wasn't a Bitcoin back in the year 2000 when they joined the WTO, or even now today, it's difficult to buy Bitcoin onshore in China. They bought property. Property was the one asset where the government was encouraging the price to essentially reflect the amount of capital that's being created and the growth in the economy. And as we saw, property market zoomed in China, and obviously it's going through a bit of correction right now, but you could understand why a Chinese person, if you see the economy growing at 20% a year and you're only getting 4% in your bank account, you're going to do something else with your money. Japan, the BOJ, has probably printed the most money in nominal terms of any central bank ever. They own more than 50% of the bond market. Same deal. Nominal GDP growth is growing in Japan, but yields are negative on bank balances, and they've been holding 10-year yields at around 1 to 1.5% for the last few decades. So it's the same story everywhere in the world. The question is, when are investors going to realize that holding bonds is for dumb people? And so, great, you can realize that, but then what are you going to do as an investor? Before these Bitcoin ETFs in the US, and obviously soon to come in the UK and probably China as well, there wasn't really many options. Okay, yeah, you could go buy some gold, but then you got to store it somewhere. It's a pain in the ass. You could buy some stocks by the NASDAQ. Obviously, good managers did that. Buy S&P, that's outperformed. But at the end of the day, you're kind of stuck in these shitty things called government bonds. Then along comes the ETF, which is finally TradFi saying, okay, well, we recognize the situation. In the past, the government leans on the banks to finance the government, and it hurts the profitability of the banks. And there was I think he's a Columbia professor, Charles Collarmus, can't pronounce his fucking name, whatever. He wrote a paper last summer about fiscal dominance. And the theme of the paper was, because the deficits are so high, the federal government in the US essentially merges the Fed and the Treasury, and they lean on the banking system with their banking reserves, which is around $3 trillion right now, to provide financing to the government. Now, the problem is that banks, at least in the US, are for-profit entities, and the shareholders want to make money. So they don't like it when the government basically says, yeah, okay, you have that great business going there, but what you're really going to do is just buy our shitty bonds. And they've pushed back on this. There was a recent, proposed legislation from the Fed saying, hey, why don't the large banks provide more capital? You have to hold higher reserves. The banks did a full court press, some sort of a lobbyist, and of course it was defeated. They don't have to provide more capital. They don't want to provide more capital because that hurts their profitability. So at a higher level, like, why not support a Bitcoin ETF? All of a sudden, BlackRock files a Bitcoin ETF last summer. Took the Wicco clowns 10 years. They still don't have one. Larry Fink gets one in 6 months, right? And so now all the banks have a way to give these bond investors something else to buy. We know that's negative yielding. We know that the government deficits are going to continue to go higher. Taxes are not going to get raised enough to cover them. Spending is getting out of control. No presidential candidate is campaigning on, I'm going to balance the budget. Not a single one of these clowns are. So it's not going to change. People are starting to realize this. And now they've got a product, at least for a TradFi, fund manager, they can allocate to a Bitcoin ETF. They don't have to change their prospectus. They don't have to worry about custody. They don't have to worry about any of the things that make Bitcoin special, other than the fact that they did the back test and it was negatively correlated to certain things they care about, and it's performed well as rates have been negative. So I think that's the macro backdrop, and that's why I think these flows are going to continue as the global investor class realizes that this time, they're going to eat a massive amount of shit if they keep holding these shitty bonds. Maybe it's time to diversify. Here's an option, and it doesn't entail any career rest for them to buy a Bitcoin ETF because it's being sold by BlackRock. You don't lose your job by buying one of Larry Fink's products as a fiduciary. So I think that's sort of the macro backdrop, which is why I think people need to not take any chips off the table. It's time to even add more, because now it's a reflexive price movement. The more the price goes up, the more people hear about it. The more they look at their bond portfolio, like, well, what the fuck? I'm down 50% over 3 years. Worst bond market performance since the War of 1812 in the US. Why am I not owning this Bitcoin thing? All I got to do is click 2 buttons and buy this ETF. And all of a sudden I've, got the best performing asset in all of TradFi in my portfolio. So I think that's the sort of the backdrop, very favorable. And it's going to be a fun bull market. This is an intellectual thing I've started to think about is, I don't want to sell Bitcoin for fiat. I want to sell Bitcoin for energy, right? Because at the end of the day, why is Bitcoin a good thing? It's because it's pure energy in a monetary form. A dollar used to be worth that when it didn't have any other competition. Now there's competition. Gold is very heavy. I have some of it, not as much as Bitcoin, but again, same issue. So if Bitcoin gets to a silly value in energy terms, then I need to sell it and I need to own something, some sort of way to have access to primary energy. Is that, ExxonMobil? Is that, buying a power plant? I don't know. I haven't really thought about it that much, but it won't be that I sell Bitcoin for dollars. I'm going to sell Bitcoin for some primary energy source, because that's what I'm trading in. That's what I'm trading. If Bitcoin's worth, 500 barrels of oil today and 10,000 tomorrow, well, at some point, this is a little ridiculous. How much oil should a monetary instrument be worth? Maybe I should just own the actual energy itself, because I've been able to get it at such a cheap price, relatively speaking. So that's kind of where my mind is at.
So there's Arthur Hayes grounding us back to the overall success of Bitcoin and the Bitcoin ETFs, and why Bitcoin is surely an asset that we should hold. Hayes argues that traditional investment options like government bonds are increasingly unattractive due to low yields and government deficits. He suggests that the introduction of Bitcoin ETFs provides an alternative investment opportunity for bond investors seeking higher returns. With all of that said, Arthur presents Bitcoin as not just a financial asset, but also a symbol of broader economic and political trends, emphasizing its potential as an investment amid changing global circumstances. If this content resonates with you, don't hesitate to subscribe and like the video. Your engagement helps continue to bring you insightful and timely content. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.